President Trump fired the Bureau of Labor Statistics commissioner last month. Economists expecting 75,000 jobs created, the unemployment rate ticking higher to 4.3%. I want to bring in the Fitzgerald Group principal, Keith Fitz-Gerald. Keith, so, the Fed has really changed its tune. It's now more about the employment picture than it is about inflation. That's what makes this jobs report tomorrow in particular so critical. What are you watching?
Well, I'm watching the Fed have any dose of reality, Cheryl, because, to operate at the speed of an abacus in a quantum computing world is really what the Fed's doing. They're using outdated data, outdated models, so they're going to be constantly a step behind. What I want to see is a continuation of the theme. I want to see the constant acquisition of jobs and talent, and that's more than the specific number. I'm looking for the overall theme and the overall movement here.
All right, Mark Tepper, what are you looking for tomorrow?
Well, look, the labor market seems to be slowly but surely weakening a bit. Job openings were down roughly 250,000 month over month. And when you look at that job openings number, the JOLTS number, I think it's important to really keep in mind that it's estimated that roughly 30 to 40% of that 7.2 million number, they're considered to be ghost jobs. And those ghost jobs are essentially perpetual job postings that companies have out there for positions where they have no immediate desire to fill that position. So I think the job market is actually a little weaker than most people are expecting. But Keith, I also believe that if the Fed starts cutting, that would make capital more affordable to business owners and CEOs, and that would give them a chance to reverse this course and make the labor market that much stronger. What's your take?
I share that view 100%. I'm of the opinion that they should have cut a long time ago, but we're talking about a gentleman who couldn't spell transitory when that problem surfaced. So what do we do with this? I think great companies are going to find their way through it. I agree with you 100% because the market is not what it seems. And this phantom jobs idea is a serious problem because it confuses the data rather than clarifies it.
I think, though, also, too, what's going to be interesting here is that how the market reacts if it is, say that it's weaker than expected or even if it comes in line, because, President Trump's probably not going to be happy to see a weak jobs report. And then also, do you trust the data? That's the big question mark we've had. And Mark's shaking his head no. And that's the problem we've got right now with this jobs report is the data is so muddled. It's so many revisions last year. I mean, absolutely, Keith, absolutely they've got to clean up the data. But they don't have a new chief in place yet.
Well, not only do they have a new chief in place, but the models themselves are outdated. Now, any prudent business person in the private markets would take a look at that problem and say, hey, how can I fix this? How can I make my models more efficient, more accurate? What can I do with these things? So, again, to operate in a sort of a digital world at digital speed with real-time data, the Fed is constantly weeks behind. So it's like trying to trade tomorrow's market reading yesterday's newspaper. It isn't going to work.
Yeah, absolutely. Well, President Trump's Federal Reserve Governor Board nominee Stephen Moran is going to be testifying before Senate banking today. That's going to be at 10 a.m. Eastern time. He is vowing to uphold the central bank's independence and focus on price stability and jobs. Fed Governor Christopher Waller again calling for rate cuts. He argues the central bank needs to get ahead of a weakening labor market. Multiple rate cuts should be on the table over the next few months, Keith. And obviously the president has called Jerome Powell too late multiple times. And it's also this interesting thing about the Fed's independence. And I want to bring this up to you because Phil Gramm, he used to run Senate banking, actually. He actually is saying that in an op-ed this morning in the Journal that the political stance of the Fed should give all of us pause. And he says, by involving itself in the political process, the Fed undercut the argument it should be independent of any political process. Independence, like virtue, is hard to reclaim once it is lost. All of these things are going to come up today in that hearing at 10 o'clock.
They are, and I think they should. It's a conversation that's long overdue. I hope it's very forcefully conveyed because the issue isn't so much independence. The issue is the perception of conflict. If the Fed is going to do its job, it needs to do its job quickly, effectively, and without hesitation. But this constant lollygagging and we're data-driven, we're this, that, and the other thing, when they're using stuff that is 3, 4, 5, in some cases 6 months out of date to make policy, just does not play well in a world that is constantly accelerating.
All right, Keith Fitz-Gerald, it's always good to see you. We'll see what the numbers give us.
Thank you.
All right.
Guess we will.
We've got a lot more coming up.